Picture this. It's 1923 in Germany. A woman walks into a bakery with a wheelbarrow, not to carry bread home, but to carry enough money to buy a single loaf. By the time she reaches the counter, the price has doubled. Her life savings, worth less than the paper it's printed on. Now ask yourself, if this happened tomorrow, would your wealth survive? Because history doesn't repeat, but it sure does rhyme. And what I'm about to show you could mean the difference between financial devastation and complete protection when the next collapse hits. What's up, everyone? Today, we're diving deep into one of the most critical topics in finance that nobody wants to talk about: economic collapse. But here's the thing, we're not just talking theory. We're examining real historical data from actual economic meltdowns to identify exactly which assets protected wealth and which assets completely vaporized. By the end of this video, you'll know exactly what to hold, what to avoid, and why most people get this catastrophically wrong. So hit that subscribe button, because this information could literally save your financial future. Let's get into it. Section 1. The harsh reality. Before we reveal the 5 assets that survived, we need to understand what actually happens during an economic collapse. And I'm not talking about a recession or a market correction. I'm talking about complete systemic failure. We've witnessed several devastating collapses in modern history: the Weimar Republic hyperinflation of 1923, the Great Depression of 1929, Zimbabwe's catastrophic currency collapse in 2008, Venezuela's ongoing economic implosion, and the more recent financial crisis of 2008. Here's what most people don't realize. During these collapses, approximately 70 to 90% of all paper wealth simply evaporates. Bank accounts, bonds, stocks, retirement funds, they don't just decrease in value. Many go to absolute zero. The critical question isn't whether you believe a collapse could happen. History proves it will happen again. The real question is, are you positioned to be in the 10% who survive it, or the 90% who lose everything? Now, let me tell you a story that changed my entire perspective on this. Section 2. The story that changes everything. In 1929, there were 2 neighbors in New York, both successful, both wealthy on paper. Let's call them Robert and William. Robert was a stock market enthusiast. He had invested everything, his entire fortune, into what seemed like the safest blue-chip stocks of the era. He believed in the system completely. His portfolio was worth over $2 million, equivalent to about $30 million today. William was different. He was more cautious, almost paranoid. He kept only 30% in stocks. The rest, he diversified into tangible assets that people thought were old-fashioned: farmland in the Midwest, physical gold coins hidden in his home, rental properties that generated income, and stakes in essential commodity businesses. When Black Tuesday hit on October 29, 1929, Robert lost everything within weeks. His stocks became worthless paper. His bank collapsed. His savings vanished. By 1933, he was working manual labor jobs just to survive. William, his stocks crashed too, but they represented only a fraction of his wealth. His farmland continued producing crops that people desperately needed. His gold increased in purchasing power by over 60% when the government revalued it in 1934. His rental properties, though worth less, still generated the income he needed. He not only survived, he thrived, buying distressed assets at pennies on the dollar. The difference wasn't luck. Was understanding what holds value when everything else fails. So let's break down the 5 assets that have consistently survived economic collapses throughout history. Asset number 1, physical gold. Gold is the king of crisis assets, and there's a reason it's been valued for over 5,000 years. But here's what you need to understand. Gold doesn't protect you because it gains value during a collapse. It protects you because it maintains purchasing power when everything else is losing it. Let me give you concrete examples. During the Weimar hyperinflation, the German mark went from 4.2 marks per US dollar to 4.2 trillion marks per dollar in just a few years. But an ounce of gold in 1918 could buy you a decent men's suit. In 1923, at the height of the collapse, that same ounce of gold still bought you a decent men's suit. The purchasing power remained constant. Fast forward to Zimbabwe in 2008. The Zimbabwe dollar became so worthless, they eventually printed a $100 trillion note. Yet gold owners could still exchange their gold for goods, services, and eventually for stable foreign currencies. They preserved their wealth entirely. Here's the critical part most people miss. Not all gold is created equal during a collapse. Paper gold ETFs, gold certificates, futures contracts, these can fail. During a true collapse, you want physical gold that you possess. Coins, bars, jewelry. Things you can hold, hide, and trade. The historical data is undeniable. Across every major economic collapse of the last century, physical gold has maintained or increased its purchasing power. It's portable, divisible, universally recognized, and impossible for governments to print more of. But gold isn't perfect for everything, which brings us to our second asset. Asset number 2, productive agricultural land. Here's a truth that survives every economic system. People need to eat. No matter how bad things get, agricultural land that produces food retains intrinsic value. In fact, it often becomes the most valuable asset of all. During the Great Depression, farmers faced incredible hardship. But those who owned their land outright had something priceless: the ability to feed themselves and produce surplus to trade. While stock traders were jumping out of windows, farmers were negotiating from a position of strength. The Soviet Union collapse in the early 1990s provides an even more dramatic example. When the ruble became nearly worthless and store shelves sat empty, those who had access to productive land, even small garden plots, became the most food-secure people in the country. Doches, the small country homes with gardens, went from vacation properties to literal lifelines. In Venezuela today, this pattern repeats. Urban professionals with impressive paper wealth have seen their savings destroyed by hyperinflation exceeding 1 million%. Meanwhile, those with access to productive land can grow food, which has become more valuable than currency. But here's the nuance. Not all land is equal. The key word is productive. Undeveloped land, speculative real estate, luxury properties, these can all collapse in value. What survives is land that produces essential resources. Farmland that grows crops, pasture land that raises livestock, orchards that bear fruit. Think about what happened during COVID-19. Just a minor disruption compared to a true collapse. Suddenly, everyone wanted to move to rural areas. People with small farms and garden space saw their property values soar while commercial real estate crashed. The smart play isn't just any land. It's land that generates resources people need regardless of the economic system in place. Asset number 3, essential skills and knowledge. Now, this might surprise you because it's not a traditional financial asset, but hear me out. During economic collapses, the most valuable asset you can possess is skills that produce essential goods or services. In post-World War I Germany, during the hyperinflation, doctors, plumbers, electricians, mechanics, and carpenters could still earn a living. Why? Because people always need healthcare. Working, plumbing, electricity, transportation, and shelter repairs. These professionals could demand payment in goods, foreign currency, or gold rather than worthless marks. Compare that to bankers, accountants, and stockbrokers. Many found their expertise suddenly worthless in a collapsed economy. Here's a modern example. In Greece, during their 2010 to 2015 debt crisis, youth unemployment hit 60%, but skilled tradespeople, particularly those in construction, plumbing, and electrical work, maintained employment. People still needed houses repaired, even if they couldn't afford new construction. Venezuela shows us the same pattern. Engineers, doctors, and teachers' professions that required years of education fled the country or switched to driving taxis. Meanwhile, those who could fix cars, grow food, repair appliances, or provide medical services could still earn a living. The lesson? Invest in learning practical skills that produce tangible value. Medical knowledge, mechanical skills, construction ability, agricultural expertise, equipment repair. These are recession-proof and collapse-proof assets that nobody can take from you, devalue, or inflate away. Your skills are the only asset that travels with you, costs nothing to maintain, and can generate income in any economic environment. Asset number 4. Income-producing real estate. Notice, I didn't say real estate. I said income-producing real estate. This distinction is absolutely critical. During the 2008 financial crisis, residential homes lost 30 to 50% of their value in many markets. Speculative properties and vacation homes became disasters for their owners. But rental properties, particularly those in working-class neighborhoods with positive cash flow, remained valuable. Here's why. Even during depressions, people need housing. They might not be able to buy, but they still need to rent. Properties that generate monthly income provide exactly what you need during a collapse: cash flow. The Great Depression taught this lesson clearly. Between 1929 and 1933, residential real estate prices fell by approximately 30% on average. Sounds terrible, right? But here's what happened to rental properties in working-class areas. Occupancy remained high because people still needed places to live, and many who lost their homes became renters. Property owners who weren't overleveraged and could maintain their buildings survived. Those who had bought speculatively with massive debt were wiped out. The difference was cash flow and leverage. In Argentina's 2001 economic collapse, the same pattern emerged. Luxury real estate crashed, but small apartments and working-class housing that generated rental income retained value because they produced something people desperately needed: shelter at affordable prices. The key elements for survival are: 1. Positive cash flow, even in bad times. 2. Low or no debt. 3. Essential housing, not luxury. 4. Ability to accept payment in alternative forms if currency fails. A small apartment building that generates income every month is infinitely more valuable during a collapse than a mansion with a massive mortgage. Asset number 5. Food, water, and essential supplies. Our fifth asset is the most immediate and often most overlooked: stockpiles of essential goods. During every economic collapse, certain items become de facto currencies. They're tradable, valuable, and often appreciate dramatically when supply chains break down. In post-war Germany, cigarettes became currency. A single cigarette could buy you significant goods. People who had stockpiled tobacco products wielded enormous purchasing power. During the Soviet collapse, matches, soap, canned goods, batteries, and basic tools became incredibly valuable. People traded apartments for stockpiles of food. Venezuela today shows the same pattern. Those who stockpiled toilet paper, medicine, canned food, and basic supplies before the collapse are now wealthy in practical terms. These items trade for many multiples of their original cost. But here's what's important. We're not talking about hoarding. We're talking about strategic reserves of genuinely essential items. Water filtration systems, non-perishable food with long shelf lives, medical supplies and medications, basic tools, batteries and lighting, seeds for growing food, items that maintain or increase in value when supply chains fail. Think about COVID-19 again. Remember when you couldn't find toilet paper, hand sanitizer, or cleaning supplies? That was just a supply chain hiccup. Imagine a true collapse. Those who had reasonable stockpiles didn't panic. They had what they needed. The smart approach is rotating, stock using, and replacing items so nothing expires. You're not building a bunker. You're creating a resilient supply system for your household. What went to zero now? Let's talk about what fails spectacularly during economic collapses, because this is equally important. First, fiat currency and cash savings. Every hyperinflation in history has destroyed cash savings. The Weimar mark, Zimbabwe dollar, Venezuelan bolivar, Argentine peso, the pattern is identical. Your savings account goes to zero in purchasing power. Second, government bonds. When governments collapse economically, their bonds become worthless. This happened in Russia in 1998, Argentina in 2001, Greece in 2012. Bonds that were considered safe became complete losses. Third, stocks in non-essential businesses. Entertainment companies, luxury goods, speculative tech, these get decimated. During the Great Depression, the stock market lost 89% of its value. Most individual stocks went to zero entirely. Fourth, complex financial instruments. Derivatives, structured products, leveraged ETFs, these implode spectacularly. The 2008 crisis taught this lesson with mortgage-backed securities. Instruments that were rated AAA became worthless overnight. Fifth, real estate with high debt. If you owe more than your property is worth and income disappears, you lose everything. Leverage is a weapon that cuts both ways. The pattern is clear. Paper assets backed by nothing tangible, government promises, and debt-based investments are the first to fail. The modern application: so how do you apply this knowledge today? You don't need to be a doomsday prepper to be smart about this. You need diversification with purpose. The rule of thirds is a good starting point. 1/3 in traditional investments for growth during good times, 1/3 in tangible assets that survive collapses, and 1/3 in liquid assets you can deploy opportunistically. For most people, this means allocating 10 to 20% of your portfolio to physical precious metals, investing in skills, development, and education that provide practical value, considering income-producing real estate with minimal leverage, maintaining 3 to 6 months of essential supplies, and keeping some cash in multiple currencies or systems. But here's what matters most. Don't wait until the collapse is obvious. By the time everyone sees it coming, it's too late to position yourself. The people who survived the 1929 crash weren't smarter. They were positioned correctly beforehand. Venezuela's collapse didn't happen overnight. There were years of warning signs. Those who acted early preserved their wealth. Those who waited lost everything. Look, I genuinely hope we never face a severe economic collapse. But hope isn't a strategy, and history suggests these events are more common than we'd like to believe. The 5 assets we covered today: physical gold, productive agricultural land, essential skills, income-producing real estate, and stockpiles of necessities, have survived every major economic collapse of the last century. They maintain value because they produce, protect, or represent something fundamentally useful, regardless of the monetary system. Meanwhile, paper assets, government promises, and leveraged investments have repeatedly gone to zero. Your wealth preservation strategy shouldn't be about fear. It should be about understanding how value really works and positioning yourself accordingly. The people who survive and thrive during collapses aren't lucky. They're prepared. So here's my challenge to you. Evaluate your current assets against these criteria. Are you holding things that would survive a serious economic disruption? Or are you entirely dependent on systems that history shows can fail? If you found this video valuable, smash that like button and subscribe for more real-world financial education. Drop a comment below and let me know, which of these assets do you think is most important, and are there any others you'd add to the list? Remember, the best time to prepare for a storm is when the sun is still shining. Don't wait until the wheelbarrows come out. I'll see you in the next video. Stay smart, stay prepared, and protect your wealth.